is the Conference Board of Canada's Chief Economist, Pedro Antunes. Hi, Mr. Antunes. Good to have you back.
Nice to be here.
I appreciate you making the time. We were just talking to Tara about expectations for inflation. It's probably one of the most, that and interest rates, I can't think of two more important numbers to Canadians watching right now. Do you also see that we might see an edge down in that rate of inflation?
I think we're expecting to see inflation down maybe to the 3.6% range. This is the year-over-year number that gets so often quoted. I think that would be good news. I think the consensus is around that number. We know a few of the items that are going into that inflation calculation, such as gasoline prices. That plays still a big role because gasoline prices swing so wildly, and we know they're down. I think the big problem for the Bank of Canada really is, essentially around the strength of the economy. The first quarter came in, as I'm sure you've seen, very, very strong. We had over 3% growth annualized in the first quarter. The retail sales numbers have been showing up a little stronger than expected as well. And employment's been just holding out very, very strongly as well. So I think all of these things are concerning for the Bank of Canada in the sense that the domestic economy doesn't seem to be slowing down in line with the rate hikes that we've had thus far. That's going to be the concern.
So would you say that the GDP data that we're anticipating at the end of this week is as important for the bank's calculation as what they're going to see tomorrow with inflation?
Yeah, it'll depend a lot on which components are driving the growth. If we're seeing some strength in exports, if we're seeing a rebound in resource exports, that's not an inflationary concern for the bank. It's really about the domestic economy, the consumer. And I know that the retail sales data, for example, has kind of rebounded a little bit. We saw some strength in vehicle sales. They were down the prior month, but they look like they're coming in a little stronger. So I think that'll be the concern. And of course, the big number will be the inflation number that we get tomorrow. If it comes in low, if the core inflation numbers are starting to back off a little bit, that'll help to settle the nerves, I think, at the Bank of Canada.
You haven't seen either pieces of those data points, but do you have an anticipation where the July interest rate decision is?
Again, I think it'll depend a lot on the numbers that we see tomorrow. So it's hard to make a call. I think the bank is nervous around wages, around domestic pressures, around domestic, essentially consumer spending, as we just discussed. And the bank did raise rates in their last. That was after telling us that they were likely going to pause and hold for a little while. So I think they may be a little careful about whether they raise again. Interest rates are at very high levels. They're restrictive. They're taking away from economic growth, and we know that takes a very long time to have its full impact. So, for instance, most of the mortgage holders in Canada, only about 30% of them have actually seen a hit to their ability to their mortgage costs because most mortgages are for 5-year terms, and we haven't seen those turn around yet. So the real impact on households in terms of what they're dispersing hasn't been felt yet, and will take some time before we see that fully into the economy.
What kind of time period are you speaking? What kind of period are you speaking about there? And I think it's an important question because I think a lot of Canadians are wondering why we keep. It feels very punitive, right? If it's not having the desired effect, because on one hand we're still paying a lot for everything, and though inflation the rate is edging down, it's still up over where it was last year, and that's up over where it was the year before, and then at the same time. We keep seeing interest rates go up, and while lots of mortgage holders haven't yet been affected, anyone who holds debt is already.
Well, obviously, you're concerned, right? If you're holding a big mortgage and you just purchased, in 2021 or 2022, you're not being affected by that higher rate yet. It's only for most mortgage holders, it's a 5-year term before they see a renewal. But you are being affected by concern around the economy. You are being affected by other financing rates for sure, and that's obviously having an impact. It's really around the tough talk, I think, that a lot of households and consumer confidence has come down. But yeah, I think the bank is very concerned about this. Again, that strength in the economy. As we see these rate hikes affecting more and more people, you know, we know the peak impact of this, or it takes essentially about a year and a half before it's fully felt on the economy. Rates started to come up in March of last year. They came up very quickly, as you alluded to, but the full impact, we haven't seen that yet on households and on the economy.
And just quickly on inflation, the bank had thought it would be around 3% this summer, but their forecasts were a bit off even when it came to GDP. Do you expect in their outlook presented toward the end of this week that there'll be some revisions there as well?
Well, yeah, I think. Well, we'll see what you know, what they publish, but let's not forget that if you look at kind of month over month, I mean, inflation. You mentioned it. It's you know, we're looking at the effects of a year ago. Prices came up, and we're still seeing that in the numbers. If you look at month over month inflation, though, it has cooled. So prices have taken off, but they've kind of stabilized more recently. And when you look at that number, it really is lining up with the Bank of Canada's target. We're seeing kind of seasonally adjusted inflation, you know, the 3-month moving average running at about 2%. So, you know, there's still some components of inflation still hurting consumers. Obviously, there's no doubt about that when we think about the grocery bills, when we think about essentially home ownership costs. But the overall price index is starting to show some signs of abating. So
tiny bit of a silver lining, maybe.
Yeah, perhaps.
Thank you so much, Mr. Antunes. Appreciate it. That's
You're welcome.
Pedro Antunes, the Conference Board of Canada's chief economist. We're going